Yo, what's up, good people? This is Tony Moore with the Paige Realty Group at GreenTree Real Estate, Southern Indiana, Greater Louisville Realtor. I'm just checking in. I've had a lot of questions about, the home buying process. I've had several family members hit me up and Paige just to inquire about the process and see how things go. So I put together, I got some notes together to give people something to think about before they actually just dive headfirst into the process and then get discouraged altogether. It could be an easy process if you have all your ducks in a row. So with that being said, let's get to it. Let me break it down for you. So if you were to come to me and ask me, what's the process, I'm going to ask you, how's your financial health? By financial health, I mean, do you have good credit? Do you have some money put back for emergencies? Do you know how much you spend every month? Because those things are kind of important when it comes to getting ready to apply for a mortgage. By good credit, I mean, a 580 or above. A 580 is going to get you a government-backed FHA loan. The FHA loan kind of has, it's a little bit more restricted versus a conventional loan or if you're paying cash. If you have a 580, that's going to get your foot in the door. If you got something higher than that, maybe a 600, 620, 620 and above, that's probably going to put you into the conventional loan range. The conventional loan, I think you can put down a little bit less. There's not as many holes to jump through. There's not as many restrictions along the way. And there's no restrictions on really the property type you choose. When you choose an FHA loan, if you're going FHA, there are things that won't fly on an appraisal, or it won't get approved if you have chipping paint on the house somewhere, or there's cracked glass, or just things like that. The FHA backed loans pretty much want the things that they give money on to be in tip-top shape. So if you got a 620 or higher, your credit rate will be lower than if you were to go FHA on a 580. The higher the credit score, the better rates you're going to get. Lower scores normally have a harder time getting approved for a loan. Anything under a 580, they're probably going to tell you to take it back to the drawing boards and give you some goals to go after to help you get your credit in line to where it needs to be in order to help you get your first mortgage. Even if you're going to buy a second home, even if this is your second home or something, even if you haven't bought a home in 20 years or something like that, you can do this stuff too. These steps are for you. These are things that you should take into consideration as well. This isn't just for first-time home buyers. This is actually for anybody looking to purchase a home. These are things for you to consider. Another thing, with the good financial health, the good credit, is having your bills paid on time. And I think that's pretty much self-explanatory. If you're looking for a home, you probably know how credits work. About 35% of your credit score has to do with your bills being paid on time, and that's a pretty big chunk of your credit score. 35%. Not paying your bills on time, that will negatively affect your credit score, and that will have a big impact on whether you can buy a home or not. Another thing is your debt to income ratio under 40%, meaning does less than 40% of your monthly income go to debt. And by debt, I mean your mortgage, your car payment, your credit card payments, personal loans, anything that you had to give your social security number to, and they're gonna run your credit and give you a loan, give you a credit card. That's your debt. To figure out your debt to income ratio, just take all your monthly expenses and divide it by your monthly income. Like I said before, your mortgage, your rent, your car payment, your credit cards, your student loans, things like that. Add that up and divide it by your monthly income. If that's under 40%, you're doing good. You're well. I don't think you're going to have a hard time getting approved if your debt to income ratio is under 40%. So, and if your debt to income ratio is not under 40%, try paying some things off. Start with your credit cards. Those are probably going to be the easiest. Those are probably the smallest compared to a car loan or a mortgage. Your credit cards are going to be the smallest sum of money. So pay those things off, get your debt to income ratio up a little bit, and that'll help you out. So moving on to the next thing, there are a few things that have to be paid up front in order to get your home. And some of those things include like a down payment. Let's just say you're getting a mortgage for $325,000 and you're going FHA or conventional, doesn't matter. Your down payment, 3.5%, 3%, 5%, whatever. 3.5%. Let's just go over 3.5%. 0.035. That's $11,375. That's something that can take into consideration. That $11,000, that's your down payment. That's needed. And then you got your closing costs, which could be anywhere from 2 to 5% of the purchase price. So let's say 325, right? Let's go 2%. That's another 6,500. So 11,375, right? That's $17,000 just in your down payment and your closing costs. Now, when you have your closing costs, there are times where, depending what type of market you're in, you could ask the seller to pay your closing costs. Now, in this market today, it's rare. Something else you're going to have to pay for is your appraisal. So if you're buying a house with a loan, an appraisal is not something you can skip. The bank is going to want to know if the property that you're purchasing is worth the sales price. And this could work in your benefit. Say you buy that $325,000 home, but it only appraises for $310,000. Well, guess what? The bank's not going to lend you your $325,000. They're only going to lend you up to the $310,000. So if that's how it is, then the seller has to make a choice on if, okay, we're going to move forward with the $310,000 appraisal and we'll take the $15,000 loss, if it's actually worth the $310,000, or they can put their home back on the market. But if you're an FHA buyer with that, and you have an FHA appraisal, that appraisal is going to stick with that house for 60 days, I think it is. Let's look this up. FHA appraisal stays with property for 120 days. What's that? 6 months? That's a long time. So 9 times out of 10, a seller, their hands are tied. Moving on, another thing, home inspection. You're gonna have to pay for a home inspection. And that's one of those things that's entirely left up to you. But if you're buying a home, I would want to know, if I were you buying a home, I would want to know everything about that home. So you get an inspector, and it's not to deter you from the process at all. And it's not to deter you from not buying the home. It's giving you a peace of mind for what you're buying. So, you're gonna buy a home, your home inspector tells you, oh, brand new water heater, your roof has got, 15 years left on it, but your furnace and AC are towards the end of their life or something like that, or it doesn't match the house or something like that. Well, since you had an inspection, you have that piece of information that you can take back to the seller. Now you can be like, hey, I love the house, I still want the house, but this, and this is wrong. We're going to ask you to fix this, and then we'll proceed to close. So I can explain that in another video about home inspections. I think they're great. I think they're good for you during the home buying process. It's not to deter you from the process at all. It's to help you and give you a peace of mind. That'll cost you, the home inspection will cost you and it all depends on the size of the house, the size of the house. So like I said, $350 or up, depending on the size of the house. One other thing you're gonna have to pay for is a termite inspection, and that's required on all loans, just to make sure that there are no wood destroying insects tearing apart your house. $50. That's probably the cheapest thing that you'll have to pay for on this journey. And if you're going VA, if you have a VA loan, the sellers actually have to pay for your termite inspection. The next thing is review your spending. Knowing how much you spend per month minus your current living situation. So if you have a mortgage, take that mortgage out of there. If you have a rent, take that rent out of there. That will let you know how much money you have left over for a new home mortgage. Utilities, food, car maintenance, car payments, student debt, clothing, retirement, emergency savings, entertainment, kids' activities, all that stuff. Add that up. If you can take some stuff away, if you can knock some stuff down, that's even better. That gives you that much more money to be able to allocate for your monthly payments. And inside your monthly payments you'll pay the principal payment on the loan, the interest payment on your loan, the property taxes on your loan, and the insurance on your loan. All that stuff is gonna equal out to your monthly payments. That's pretty much it for the considerations. If you think that you've got a good grasp on that, I think you're ready for the next step. And your starting point is to figure out how much mortgage you qualify for. Speaking with a lender, that will help you understand how much you can afford based on your monthly income, how much debt you have, and how long you've been at your current job. That's what they look at, especially your job. You've been at your job 2 months, it's probably not gonna happen. I think they require maybe 6 months minimum. If you work off commission, a 1099 employee, then it's 2 years. And a part of this process is, let's say you find a home that you really, really, really love. This is the one. You can't live without it. You can't sleep at night thinking about it. This is the one. After you've talked to your mortgage broker, we know how much you can afford. We know that this is in your price range, but you haven't given all the necessary information to your lender in order for her or him to complete your paperwork to write this offer. It's important that you get all necessary information to the lender that they need so you don't have any hiccups when it comes time to write an offer. All necessary information includes the most recent 1 month of pay stubs, so most recent 4 pay stubs if it's paid weekly, or most recent 2 pay stubs if it's bi-weekly, 2 months of bank statements, 2 401k statements. If you're buying a home right now in 2021, they're gonna need your 2020 W-2s and your 2019 W-2s. If you wait till next year, 2022, to buy a home, they're gonna need your 2021 W-2s and your 2020 W-2s. They're also gonna want your tax returns for those same 2 years. And the last thing they'll need is your driver's license. It's just a part of the verification process. All the stuff that they need, this will help them write your pre-approval letter. And that pre-approval letter is going to be the first tool that we use when it comes to write your offer. That's going to let the seller know that, hey, you have a strong offer. This is how much you can afford. That's our first tool. The next tool that we have, or that we could use, is your earnest money, which I can talk about in another video. It's kind of good faith, good deposit that comes back to you on your closing statement. Another thing is your closing flexibility and an escalation clause if needed, which we can talk about all that in a separate video about writing an offer. And at this point, your lender's probably gonna give you a number. The number is usually a big number. It's probably your max is what they're gonna give you. And I want to be the first to tell you that you don't have to spend the entire thing that they approve you for. We can set up different scenarios so you can see the monthly payment on a $325,000 home versus a $250,000 home. We'll line those up side by side. Get with your property taxes, your insurance, all that stuff, to get as close of an estimate as we can, so you'll know if you're going to be able to handle your monthly payment every month. Things to consider on your loan are, that's something that I've already talked about, which is your property taxes, your insurance, your principal, and your interest. Step 2, find yourself a good real estate consultant, or 2, if you're smart. What is a trusted real estate consultant, or realtor for short? A trusted realtor will guide you and educate you on things that you may not be familiar with on, the home buying process, or things like that. They're not going to push you to buy just anything. They're going to educate you and help you make that right decision. Most importantly, a trusted realtor is not a salesperson. Like I said, they won't pressure you to buy anything. Find somebody that you're comfortable with, that you like, that's educating you, that answers your questions, that they're there for you every step of the way. Step 3, after you've hit your starting point, after you found yourself a trusted real estate consultant, we're going to find you the perfect home. We're going to find you the perfect home that checks off all the boxes that you set forth. And, just know there may need to be some give and take. The perfect house may not be out there, but a great house is going to be out there. You know what I mean? If you watched this far in the video, I greatly appreciate it. If you found this information helpful at all, please share it with your friends and family who are hoping to purchase in the near future. The goal of this video for me is to help you get all your ducks in a row, so you're not going into this process blind. Because the purchasing your home, it's a big decision, it's a big choice, it's a big, it could be a lot to handle. But if you got the right people working with you, you're gonna be okay. Let me know down in the comments if you guys enjoyed this video. I plan to make, I hope to make more of these. I love educating, giving the free game, helping people out. That's what me and Paige are here for. Like I said, if you want to see more content like this from me and Paige, let us know in the comments. And be sure to like us on Facebook if you're watching this on Facebook. Follow us on Instagram if you're watching this on Instagram. And smash that like button wherever you are. Also subscribe on YouTube. I appreciate you watching. Hope you gained some knowledge from this. Peace.